Concepts. Medical insurance covers the cost of medical care and services for illness, sickness, accidents, and injuries. Medical insurance may cover doctor and nursing services, hospitalization, surgery, prescription drugs, diagnostic tests and treatment, physical therapy, mental health services, medical supplies, emergency services, and dental and vision care. Definitions. Indemnity policy versus managed care plan. Medical expense insurance plans are divided into two classes. Indemnity policies. Managed care plans. Indemnity policies, associated with traditional insurers, reimburse the insured for the cost of covered medical care. An indemnity policy bases benefit payments on the actual amount of the loss. So, medical expense indemnity policies repay the insured for all or some of the medical expenses incurred. This indemnity approach gives insureds the freedom to choose any doctor or medical care provider. Managed care plans are systems of healthcare delivery that combine characteristics of a healthcare provider and an insurer. Premiums paid for a managed care plan are treated as prepayment for medical care services that will be received through the plan's network of healthcare providers. By also paying co-payments when they receive these services, plan members share the cost of care with the insurer. Key point. An indemnity policy collects premiums from the insured and the insured pays for covered medical care. Then the insurer reimburses the insured for some or all of the cost of the care. In contrast, a managed care plan collects premiums from the insured and then pays for covered medical care. The insured may contribute a co-payment. Managed care providers include health maintenance organizations, HMOs, and preferred provider organizations, PPOs. Insureds versus subscribers/members. A person covered by a medical expense insurance plan is an insured or a member. A person covered by a traditional indemnity policy is an insured. A person covered by a managed care plan, such as a Blue Cross and Blue Shield plan or HMO, is a member, subscriber, or participant. Fee-for-service basis versus prepaid basis. Medical expense indemnity policies use the fee-for-service approach to pay claims. The insured pays the healthcare provider for services and then submits a claim to the insurer for reimbursement. Alternatively, the insured may assign the insurance benefits to the healthcare provider, which bills the insurer directly. If the insurer does not pay the entire bill, the insured pays the remaining expenses. Managed care plans such as HMOs and PPOs operate on a prepaid basis. The plan member may pay a co-payment to cover some of the expenses. The provider may also bill the member for any remaining expenses that the plan does not cover. Specified versus comprehensive coverages. Medical expense plans, MEPs, provide either specified or comprehensive coverage. Specified coverage addresses a specific form of care, hospital only, vision only, or dental only. Some policies only offer coverage for a specified disease or condition, such as heart disease or cancer. A critical illness plan pays a benefit if the insured is diagnosed with one of the illnesses named in the policy. In contrast, comprehensive coverage addresses a variety of conditions or medical services. A person might have coverage for routine doctor visits, hospital expenses, surgical care, medical treatment, and so on. The more services or care the policy covers, the more expensive it will be. Benefit schedule versus usual, customary, and reasonable charges. Medical expense indemnity policies use one of two methods to determine benefit payments for medical procedures. An older method, used today only with basic plans, bases benefits payments on a benefit schedule. The insurer assigns a price, or a dollar amount or unit value, to each medical cost, procedure, charge, or aspect of coverage. The amount the insurer pays to the insured is a percentage of this assigned price, such as 80%. However, the insurer may pay the full amount of the assigned price. A more common method bases benefit payments on the usual, customary, and reasonable, UCR, charge for a service. The amount payable is based on the amount that is usual or common for the area in which the service is performed. It may also be based on the usual charge that most other healthcare providers of similar training or experience charge. Costs for medical treatment in large urban areas are typically higher than costs for the same treatment in rural areas. The UCR approach accommodates these differences. Example: Sandy and Cindy are insured by the same plan. Sandy lives in Chicago, Illinois, and Cindy lives in Lubbock, Texas. Both undergo the same medical procedure. The usual and customary charges for the procedure in Chicago are higher than in Lubbock. So, Sandy's benefit payment will be higher than Cindy's. How UCR rates are set. To set UCR rates, an insurer refers to databases that rank medical procedures according to cost for specific geographical areas around the country. The insurer then determines how much it will reimburse under its policy. Both the benefit schedule and UCR approach specify the maximum amount that will be paid for any medical service or supply. The policy pays the lower of the stipulated amount or the actual amount charged. Any provider versus limited choice of providers. Owners of medical expense indemnity policies can choose any provider for their medical care needs. This is known as any provider coverage. When first created, managed care plans limited a member's choice of providers to those within the plan's network of providers. Modern plans still favor providers that are in the plan's network, but let members choose a provider outside the network. The plan may provide less coverage or charge a higher copayment if the member uses an out-of-network medical care provider. For your review, medical expense indemnity policies reimburse the insured for the cost of covered medical care. Managed care plans are systems of healthcare delivery that combine characteristics of a healthcare provider and an insurer. Under the fee-for-service approach, the insured pays the healthcare provider and then seeks reimbursement from the insurer. Managed care plans operate on a prepaid basis. A member may make a co-payment to cover some expenses. The provider may also bill the member for expenses that the plan does not cover. The benefit schedule is used in basic medical expense indemnity policies to determine the amount of benefit payment. Most medical expense indemnity policies base the amount of benefit payment on the usual, customary, and reasonable UCR charge for the medical procedure where it is provided. Owners of medical expense indemnity policies can receive covered health care from any provider. Although they are not limited to providers in their plan's network, members of managed care plans get the broadest coverage and largest benefit payments when they are treated by network providers. Please pause the audio.
The field of medical expense insurance has changed greatly over the years. With the Patient Protection Affordable Care Act, or PPACA, more commonly known as Obamacare, now in effect, the changes are more significant than ever. Health insurance producers who sell medical expense insurance are going to have to really pay close attention to see how the PPACA impacts their business. Your insurance company is certainly going to keep you fully informed of those changes, but it's your responsibility to be participating in this learning process as we go through this major change in how medical expense insurance is delivered to Americans. Some of the things that will likely remain true even after the PPACA is fully effective include the following. First of all, medical insurance will continue to be provided through commercial insurers and managed care providers like HMOs and PPOs. Number two, states will be creating a new market for individuals to shop for medical expense insurance called health exchanges. A health insurance exchange is not a new type of an insurance provider. It is merely a market that brings together the different providers of medical expense insurance that gives consumers a means of shopping for the type of coverage they want. And if you study the PPACA, you know that one of the key characteristics of this law is what we call the individual mandate that requires every American to be covered under medical expense insurance, either through their employer or through the purchase of an individual policy. So these health exchanges are going to be an important part of that process. Number three, commercial insurers will continue to sell indemnity policies. I know there's some talk about the PPACA changing the way that insurance is delivered, the basic product. Not so true as far as we can tell. Standard medical expense insurance plans that reimburse incurred medical expenses will continue to be one of the options available to consumers. And then lastly, Managed care providers will continue to offer managed care plans. And these are plans that provide for medical care as well as cover the financial end of the operation. So in total, even though there's a lot we still have to learn about the PPACA, what we know for sure is that the world of medical expense insurance is going to rely on folks like you selling the products that you sell to help keep Americans fully insured.
Okay, so here's the 4 questions for this lesson. An insured managed care plan most likely refers to the insured as the policyholder, or could be insured. Kim lives in an urban area with a high cost of living. Grace lives in a rural area with a low cost of living. They have identical medical plans from the same insurer, which pays claims as usual and reasonable UCR basis. Why will the insurer pay each different benefit for the same medical treatment? Costs for the medical treatment in large urban areas are typically higher for the same treatment in rural areas. That's my fault. Patients have different symptoms, all policies at different times. No, it tells you up here they have a higher cost of living in an urban area. All right, insured health insurance plan pays benefits based on the amount of loss. The insured is repaid for some of the medical expenses the policy covers. What type of health insurance plan does the insured have? Video. And a provider always has a characteristic of medical expense indemnity, managed care plans. All right, let's guess. Oh, I did really bad. I got 1 right. Okay, so let's go through this. All right, insured managed plan most likely refers to the insured as a subscriber or participant. So I was way off on that one. I've never heard that before. This is the one I got right, which makes sense because it tells you right up here in the sentence. Urban area has a higher cost of living. All right, this one is indemnity plan. Managed care providers include health maintenance organizations, HMOs, and preferred provider organizations, PPOs. PPOs are not insurance plans, so it would be an indemnity. I'm probably saying that wrong. Indemnity plan. All right, number 4. Provider coverage has always been a characteristic of medical expense indemnity policies. Managed care plans may favor providers with their networks, but only medical expense indemnity plans have always paid benefits without restrictions on the provider. So the answer here is medical expense indemnity policies. Okay, that's it on this lesson. The next lesson is managed care plans if you're interested. I shall see you all in the next video.